There's the
There
man.
we, there we are. We are back. We're back from spring break. How was your spring break week, actually, Mr. Kaufman?
Um, well, it was uneventful, put that way. It was nice. Just a nice little week. I think I had. I think I, we just got back from that Cabo trip not long ago, and that was my big. That was like my big party week. I guess, as you are probably well aware.
It was
But
a good time.
oh yeah, it was a great time. So last week was a nice chill week. It was good. We had somewhat decent weather.
Well,
Then it dropped to 20 degrees. You know, uh,
yeah, yeah. So it was great. Yeah, so it's 90 the last 3 days as a high, right? And then right the next week it's 50 as the high. Yeah, it's typical Missouri. The 12 seasons of Missouri. We're in the what early summer, right? As the season.
oh yeah. I got a sunburn yesterday. Not sunburn, but got a little color to my skin yesterday. But
Oh, it is always something here in
yeah,
Missouri weather-wise, and we
I'm trying.
can't seem to have like normal. Like when we were kids, didn't it seem like we had true seasons? Like spring was spring, and summer was, and it took a little while for summer to ramp up, right? But now it just goes right from at some point in March or early April, it just goes from okay, it's 40 degrees as the high, and now it's 90 degrees as the high, and welcome to summer. It's just like there's no transitionary period. There's no 75 degrees and beautiful weeks. Doesn't seem like anymore. Can't quite figure out what's going on with that. Of course, you know, the people would say that that's global warming, brother. By the
Well,
way, that's all a bunch of bullshit if you actually look at the science. Hey, if we actually followed the science, most people would shut the hell up because they don't know what they're talking about. But just want to say, like, you
well,
know,
I'm on the big. I've got my conspiracy people that I follow, and it's. I think people would be shocked uh, at just how accurate some of these conspiracies are. And, I'm not into it because I'll sound like a loon. But anyway, yeah,
they're proven correct over time,
yeah,
right?
yeah,
It starts out as a conspiracy because it doesn't seem reasonable, but then as you go through the years and you look back on it and you're like, oh yeah, that's exactly right. That was it. Yeah. So now it's not a conspiracy theory. It was just the actual truth that nobody chose to believe or ignored or suppressed as we live in today, right? So
yeah.
yeah, it's a good time.
Anyway, all right.
Sorry, we better get off our soapbox and get on. We are here about our creative real estate investing mastery podcast. You see, I've almost got that down to a science
You
now.
can you can
Getting
almost
that right.
not cheat. Yeah.
Yeah. Yes, powered by Sub2 Empire. I leave that out a lot of times. What is our topic for today's podcast episode, Mr. Kaufman?
Today, I thought we'd talk about a little bit something that I think certainly I did. I overthought this in the beginning. It's something that I was always really terrified to ask people, particularly even people that I knew that were in this business. I used to get really nervous about asking for money. So today we're going to talk about um, some strategies for raising private capital. Everyone is going to need private capital at some point. It doesn't matter. I mean, the average real estate investor, I don't know the figures, but I would venture to say that a lot of them get into this with, you know, not enough money to be able to go out and buy everything that they need to buy to be able to sustain themselves off of that portfolio that they're trying to build. So at some point, everyone is going to need private money. It is so important to develop that skill of, and maybe some people don't have this problem. I know that I had it, and I've talked to many people that had that have the same issue. Um, and I'll just tell this little story. When I was a kid, I was brought up to be the person. If you get invited over to someone's house, you don't ask for anything. You don't ask for water. You don't ask for food. If it's once, you turn it down. If it's offered twice, you turn it down. If it's offered the third time, you can take it. That's how I was raised, and so that's a lot of times I don't like to associate. A lot of times I think that people use how they were raised as an excuse, but it does become kind of ingrained in you, and I think I think it's just over my entire life. That's how I have always viewed things like that. And so, uh, asking someone for money it was a real problem for me, and I think I have a sneaky suspicion that it's a problem for a lot of other folks too. So we're going to talk about ways that maybe you can get over that, and or maybe ways that you can kind of if you do have that kind of that personality, ways that can ease you into making this a much simpler conversation with folks looking to lend money. There we go. That's what we're talking
Yeah.
about.
Well, that sounds good. Can I just go back to something that you said before? It's about every real estate investor needs private money. That's that's really true. Like I believe that to be a true statement. Because let's say you're first starting out. Because I did this a lot. You have great credit, you've got a W-2 job, and you have good income, and you want to do a flip, or you want to get a rental property or whatever. And so you can just go to your bank and potentially do that because
Mhm.
you have the resources, and that's all fine. But the fix and flip that, and some banks don't do this, but they'll do fix and flip loans. Traditional banks will, especially if you have a relationship with them, your personal banking's there or whatever. And so they're going to want you to put 20 or 25 or even 30% down on that fix and flip commercial loan. And so say, okay, well, I have that. But then you're in the middle of that deal, and then this other beautiful deal comes up. Maybe it's even across the street. Like they walk over and say, "Hey, what are you doing here?" And now you can buy this house across the street. Well, you're tapped out, brother, because you had to put the 20 to 30% down, plus you've got 50 to 60 or whatever the rehab expenses. All this is out of pocket necessarily for you, right? And so, how are you going to get that other house?
Yeah.
Like you can't get it from the traditional bank, so you've got to get it from a private investor. So how do you go about doing that? And we're just talking about. I just want to, so we don't confuse anybody here. We're talking about just you found that great fix and flip, or even that rental property, or maybe you're going to burr the rental property. All right, I love the burr, the burr term. I was doing burrs before burr was a thing, by the way, but that's all. It's all good and well, right? And so what are you going to do? Right? That's a little different than we're trying to do. We have a real estate fund and we're trying to get investors in our fund. Totally different type of raising private capital. So what we're talking about here is just you need private capital for a deal, like a specific deal.
Right.
So
Yeah, and I think you know, generally speaking, well, generally speaking, the way that it goes is, and this is what a lot of people are told, and it does work. But generally, what happens is someone new, let's say, maybe they have a W-2, maybe they own another business, but they're getting into the flipping business. 9 times out of 10, what people are doing is they are going out and they're finding a hard money lender. Now, a hard money lender is much easier to talk to, by the way, because that's their business. That's what they do. They don't make money. They use or they use the money that they have access to, and they don't make money unless that money is deployed. So it's much easier to talk to them, and so a lot of people take that easy route, and they just go straight for hard money. But the problem, as we've discussed many, many, many times, is that hard money is the most expensive money that you can get. It is so expensive, and it can literally destroy your deal if you don't buy right.
yeah,
So,
yep,
and there's nothing wrong with doing that, getting into a deal if you're new and that's your only your only resource for that capital. But your goal, your ultimate goal, is to have a handful of real private investors. When I'm talking about private, I'm talking about individual people that aren't necessarily out here selling their selling their hard money product. These are people uh, that generally that are in your network. Maybe it's a someone that knows someone, so they're only literally just a step away from your direct network. It's usually a very tight knit group where you're pulling these funds from, uh, or where these investors live. So um, yeah, I mean, like I said, nothing wrong with using hard money in the beginning, but especially if you're trying to scale, hard money is, boy, it's tough when you're trying to scale. Those are big payments that you have to make.
Unless you're buying at 40, maybe 50 cents on the dollar.
Right.
Can we just talk about the hard money too, about
Yeah.
being most expensive? Let's just give real life numbers around the hard money. So if you are a new investor, like you've not done a fix and flip, or maybe you've done one or two, but you're still relatively new, you're going to get the highest possible interest rates and the highest possible points charged to you.
Yep.
So for most hard money, realistically, that's 15 to 18%.
That's right.
That's 1.5% a month, right? 1.5% a month on your interest, and you'll probably need to pay 1.5% as your interest only payment.
Hmm.
So $100,000 loan, right? You're $1,500 a month,
Yeah.
right?
Yeah.
And you'll get 3 to 5 points just for the privilege of having the hard money.
That's right.
Just for being able to have the hard money, they're going to charge you 3 to 5 points, which is 3 to 5% of the loan. So $5,000 that you're just giving them for the privilege of having the money. So, and then you're 1.5%, 1.25 or 1.5% on the interest rate. I mean, it can get pretty, and sometimes if you buy right, those numbers can certainly be fine, but it can, like you mentioned, it can ruin your deal.
Yeah. Yeah. I mean, I certainly borrowed my share of hard money. I think the most that I ever paid, and I think about this now, it almost makes me feel sick. Uh, now, this individual made it super easy for me. In fact, he didn't even come out and look at the property. I told him the numbers over the phone, and he approved it over the phone. That's how. Uh, if that gives you any sort of indication about the kind of interest rate that I paid, I mean that should tell you something, right? But I paid 18% and
Yeah,
6 points, 3 points up front and 3 points on
was
the
on
back.
the back. Yep.
Yeah, and it was now those were back in the days when you could pick up what now the property that the very same property that you can pick up today was priced very differently when I got started.
Yep.
So I was buying 30, 40, $50,000 homes, where today that would cost you $150,000 pretty easily. So it's become way more expensive. It's much harder to use hard money and actually turn a profit. It's very hard. I think that's why you see all the kind of the gurus out there are telling you that you have to buy it at 30, 40, 50 cents on the dollar in order to make a profit, because consequently they're also hard money lenders.
Yes.
so
Yes.
so it makes sense. But no, the cool thing is with private money, obviously, you're not dealing with someone who has hard and fast terms. You're usually dealing with someone who probably has some cash sitting in an IRA that's earning 3 to 6%, something like that, or even worse, it's sitting in a CD that's earning like 0.1%.
Per
I
month. Yeah. Yeah.
mean, it's just what a what a. I get CDs. I know they're safe, but boy, what a scam! What a scam that is.
Yeah. Not even getting interest rate.
Yeah, and even
The
the best.
interest rate's not even above inflation, right?
Yeah, Even the best savings accounts are maybe 1%,
Yeah.
maybe. So um, so what I'm saying is your offer to a private lender is, you can be much more flexible with that. Obviously, you're not going to offer a private lender the same type of return that a hard money lender is getting, generally speaking. Um, you could, but it wouldn't make a whole lot of sense. Even still, dealing with a private lender is going to be way easier than dealing with a hard money lender. Hard money lenders are still going to have certain requirements, and I mean, it's gotten to the point now where you might as well go qualify with a bank with some of these hard money lenders. I mean,
Yeah, they're
you
getting much stricter. Well,
yeah,
the market shifted a little bit, and every time that happens, they get
that's true. That
a
is
little
true.
more antsy on the qualifications and all that stuff too, legitimately so. So,
Yeah,
but
yeah, but the whole idea behind hard money is they're lending on the asset, and so if you can buy the asset right, with plenty of margin in it, plenty of insurance, built-in insurance for them. Um, Generally speaking, they're going to lend on it, and your credit score, while it's still a factor. You can't have any kind of outstanding judgments and all this good stuff because you won't be able to sell the property, and they ultimately won't get paid. But they're lending based upon the value of the asset or what its potential value is. So they are much easier to deal with. Um, but private lenders, that's
like
that's not
us,
even really a factor to them.
right?
They're in it, and with private lenders, they have to be money motivated. It is not about what your bathrooms are going to look like, or are you putting granite in the kitchen. They don't care about any of that. They're generally money motivated. They give you a certain amount of money, they want a return for it. So private lenders are just way easier to deal with and to manage. On top of this, and I'm sorry, I'm taking up all the time, but I am genuinely, I genuinely do think this is very important. But on top of all this, uh, with a hard money loan, you are generally going to have payments. I don't know of any hard money lender that doesn't take monthly payments, and that's because, for the most part, they have monthly payments. They're not using their own actual cash. They are using cash from that maybe they've got a line of credit. Maybe maybe they borrowed the money that they're lending out, and they have a payment, and so they require for you to have a payment. This is their monthly cash flow. Private lenders is a different story. Private lenders, you can structure it any way. You can make payments. You can make interest only. You can be super flexible on payments. But most of my private lenders, I do not make payments to. I don't know about you. I do not make payments to them, monthly payments.
Just depends,
It
right?
depends.
Just depends on how long it is, and maybe if there's an extension or there's like an auto renewal in there. At the auto renewal, you get a interest payment or something too. But generally speaking, we don't charge monthly payments because we're doing pretty short term loans too, generally speaking.
Hmm.
So yeah, that's another advantage where you don't have to worry about it until you sell the asset and it closes at the end. So
Right. Well, let's talk about, now that we've established the difference, between hard money and private money, and certainly I don't think we even need to talk about bank money. I mean, it's
no, this is about scaling. You need the private money or even using hard money. It's about scaling. I think you mentioned at the beginning, it's about trying to scale. In other words, so you can have two or three projects going on at once as opposed to just one, and then you move to the next one and then you move to the next one, which is fine too, especially if you have a W-2 job. But if you're wanting to do two or three, then you've got to find other money sources. So
yeah,
that's what we're about today.
yeah. I've told the story before on this podcast, but the very first time I was in a mastermind. Um, I don't know. I got into it about 3 years after I got into the business, and which I think is typical for a lot of people. I think a lot of people do that, and it's cool. I mean, it was probably one of the best decisions I had made up to that point. was to join this mastermind. But in this mastermind, I made it known that I struggled with this. I struggled with getting up the nerve to go out and approach people, whether I knew them or not. I struggled with asking for money, or and I don't even like the term. I don't even like to use the term asking for money anymore, because I'm not really. That implies that I'm asking it for myself. I'm not. Um, but I just didn't. I didn't even know how to approach these people. I didn't know. I was so uncomfortable with how I even, kind of broach the topic. How do you even get from, hey, my name's Jeff, to, hey, can I borrow $250,000? So I struggled with that entire process for a long time, and consequently, I fell back on the hard money lenders, which cost me dearly. It cost me a lot of money. And so I had to. This is a skill that, if you're in my shoes, if you feel the same way, this is something that you have to develop. That you have to. It's a skill like any other skill, and you have to practice it. It's that, I don't know what some people call that, a muscle that you have to exercise. But this is definitely, for me, it was definitely something that I had to just do over and over and over again, or attempt to. And man, I was,
It's not dissimilar to going in and talking to sellers, which we talk a lot
yeah,
about too. It's a different conversation, obviously, right? I mean, it's a different person, but it's the same. It can be the same anxiety
yeah,
going in there and trying to pitch, because a lot of times am I pitching myself? Am I pitching the deal? Am I pitching both? Do I need a PowerPoint? Do I need a spreadsheet with all the numbers and the rehabs of like what do you need? Like, how prepared do you need to be and all that? So as the title of this indicates, we're just trying to make sure you relax. Yeah,
yeah,
take a deep breath. And for me, what you're pitching, so if I'm sitting in the cigar bar, right? I don't actually smoke. I've never actually smoked a cigarette, a cigar in my life. I've been in places where I might as well have been smoking myself, but I've never actually smoked in there. So just envision, like, we're in the cigar bar, right? We're kicking back in there and we're just shooting the shit about, hey, what's your business or real estate, all that stuff. I don't expect you, right? Like, I'm the guy with the money, right? In this scenario, I don't expect you to pull up your PowerPoint on your phone or on your laptop while we're sitting there shooting the breeze, right? Right? You want to pitch. So going back to there, so it's a conversation about yourself. What do you do? I'm a real estate investor. I've got this great deal. Here are kind of the margins on the deal. I'm looking to get it funded. Like, really? How much do you need and what's my return? Right? That's the very first question I'm going to ask you. How much do you need? What's my return? And what's the term? What's the length of time to get the money back?
yeah,
Right? That's what you need to focus on. Like, no, don't be, you'll probably be nervous, but you don't necessarily have to be nervous, right? It's just a conversation, right? That's what we're trying to suggest, especially for the private money lenders. The hard money lenders are a little more like, you got to put an application in and all that stuff too, and all that, but a little different on the private money side.
yeah. I think it even goes. I think it's rooted even deeper than that conversation. If we just go back to, um, the fact that, if I walked into a cigar bar, and by the way, I do smoke some cigars. I just had my first cigar since we got back from Cabo over the weekend, and I think I have found my kind of go-to cigar. Camacho makes a really good cigar. Anyway, but if we go back to, if we take a step back, and we're talking about, well, if we just think, how do we even get into this conversation with this individual? How do we even meet up with this person?
Right, right.
Like, how are we? Is it just coincidental that we're sitting at the cigar bar together? Uh, and I don't think most of the time that answer is yes. I'm sure that happens. I'm sure that happens quite a bit. But one of the keys to this is not going out and trying to jump down somebody's throat and say, "Hey, I need some money." The key to this, the very first thing, is making sure that everyone that you know, everyone in your network, and I'm not talking business network, I'm talking about friends, family,
Personal, yeah, yeah.
everybody, everybody needs to know what you do. And that was actually another issue for me because, you know, I was told that many times, and I was like, these people aren't going. First of all, they don't care what I'm doing, and secondly, I don't really know what I'm doing. How am I going to go out and, you know what I mean? How am I going to go out and tell these people, hey, I buy houses. Now, a lot of people don't have a problem with that. I did because I had this kind of inferiority complex. What did we have? What was our podcast last? Was it last week or a week before?
Being a fraud, yeah, you feel like a fraud. Talking with sellers, yeah, so it can be the same thing here, right?
Yeah, so I didn't know, but uh, that was just another muscle that I had to train and flex and exercise, and I eventually that's what I started doing, and that I think that is the root of how that is how you start this whole process. You're never gonna. It's gonna be. I'm not gonna say never. It's gonna be very difficult to go out and talk to someone about borrowing capital from them if they don't know you. It is very hard. It's not an easy thing to do. So, first baby step, everybody that you know, literally everybody, everyone on your friends list on Facebook, on Instagram, all of those people need to know exactly what you do. And not only that, it's not just like one post. This has to be repeated. This has to be almost systematized where everyone knows what you do. Everyone knows what you're looking for. And ultimately, that's where the network begins. That's how, um, and it's not just social media. It's every everywhere you go, anyone you're talking to. It can. I hate to say it, but it can kind of become unhealthy because it's always on your mind. And you never seem to, or at least I didn't, never really seem to relax. So yeah, before you get to that point where you're sitting down with the money guy, um, somehow they're going to have to know, for the most part, what it is that you do. That just makes the conversation much more comfortable. So you're not going in blind. They're not being blindsided, and this is the way that I did it. I mean, I can only. I'm sure there are plenty of other people that have been successful doing this without going through this whole rigmarole. But if you are struggling with it, then this is something I think that you should definitely consider implementing. And that is, like I said, just making sure that every single person that you know and beyond knows what you do.
Yep.
Excuse me.
And while you're doing that, you're going to get plenty of naysayers too. By the way, that's like it was, especially from your family. Well, family and friends both, but mainly from your family. Like
Oh,
you're doing what? And you're like, yeah, no, I'm not going to work for the man for 40 years. Like I'm going to replace my
it's
income and get out of this W-2 job. And then sometimes people retire when they're 45. So it's possible,
yeah,
right? It's
and
possible.
that is you know I'm fine with, like, I get along with my family just fine, no problems. But it did, even to it felt weird when I would tell them what I was doing, and it's like, and I look back on it now, and it's probably because they didn't understand it. You know what I mean? And so, but to me at the time, it felt like it almost felt like a personal attack. Like, you're crazy. What are you doing?
Mm.
Just go to your job. Why can't you just be like everybody else, type of thing. That's how I felt. I'm not sure that that's what they were trying to, I'm not sure if that's what they were trying to tell me, but that's how it felt. So, that kind of adds on and maybe builds on to the imposter syndrome type of thing. But I guarantee you, today they know what I do, and
Yeah,
yeah, yeah, and
yeah.
I'm what now, 11 years later, I'm still doing the same thing, and I haven't had a job in almost 10 years. Well, 8 years now. So anyway, um, let's continue down this path a little bit more, because let's get to the point now. Everybody knows what we're doing. Um, Now we've got someone who is maybe a little more they're inquiring, maybe they're a little bit more inquisitive about what you do because they have some cash they'd like to put to work.
Yep.
um, and so what does that start to look like? What does that how do you cross that threshold of getting into this conversation with that individual? And honestly, the best way that I have had success with it is simply, this is going to sound a little strange, being the reluctant borrower. Just like we're the reluctant buyer with our sellers. You don't have to force this down their throats, and you probably shouldn't, because it's probably going to be reflective in the loan that you get. But the reluctant borrower, um, kind of doesn't need your money. They kind of don't need it. And so the way that the conversation flow kind of happens is, they may ask what it is that, or they may ask, um, what the deal looks like. Hey, I got this deal. I'm trying to get it funded. Well, what does that deal look like? And it doesn't have to be. You're not trying to juice this deal up. You're not trying to make this the best looking deal on the planet. You want to give them a picture of something that is true and factual. So if this thing's a turd, and it needs a ton of work. There's a lot of work to do. Um, Being open and honest about this is one of the biggest selling points that you can have. And then I would also say that people are proud. Like, people are, they only tend to want to highlight the things that they've done, the good things that they've done. And this is a scenario where that is going to turn around and bite you. You must, and I'm telling you, this is so true. You must be willing to share your failures. You have to, um, because while that sounds really terrible on the surface, those people, those people who are smart people, generally speaking, when you tell them what your failures are, that tells them that they recognize that how you failed. That also tells them that you have probably, in all likelihood, you have remedied that failure, and you won't let that failure happen again in the future, right?
Well, you would think that's
You would
correct.
think,
You would think.
no, that's not 100% all the time, for sure.
Yes, but it does lend credibility to the fact that you learn from your mistakes. That's the whole point. Yeah.
Yeah, yeah, and I'll tell you, you know, this kind of goes back to the whole. If you guys don't know this story, I got scammed in 2019, and so it knocked me on my butt. It knocked me on my butt so hard. Um, it destroyed my credit, the whole 9 yards. And so I've had a lot of good lessons that I actually consider today, uh, some of the best things that ever happened to me were these failures that I made. And I do believe that. I do genuinely. Maybe it's hokey. I don't, you know, whatever label you want to put on, or whatever you want to say about it. Um, I do consider those failures some of the best. Maybe they weren't fun while I was going through it, but it's some of the best lessons I've ever had in my life. It's very Failure is a very powerful teacher. It is, and I think it's imperative. I think dare I say that I kind of look forward to the failures, because I don't know what I don't know until I actually have one of those failures. You know what I mean? So um, I don't know. What are your thoughts on that?
Um, I think I think your best successes come from your failures. Like, ultimately speaking. So, and you can't avoid failing, right? You can't avoid failing. Have I made money on every single real estate deal? No. Have I tried to limit the failures and all that? Of course. But you're still going to have, you know, something, the market could turn, you're down here, you find termites in the house, whatever. I mean, there's all kinds of things on any particular deal where you can go from success to failure pretty quick, or break even pretty quick, right? So I think that's where the lessons learned. And the people that start out in real estate investing and then you turn around a year or two later and they're gone, are those people that don't learn from their failures. they,
That's
they
true.
don't they don't get it, right?
Yeah, yeah. Good point.
Right, and that's true in any industry. Like, you can just look around at all the different people that are, I mean, that are just dumb from the perspective of they refuse to learn from their mistakes. They're all around us. Politicians being a prime example of, they simply don't learn from their mistakes, right? And so it's everywhere. But you have to, that's the key, you have to learn from your mistakes, you have to be authentic. So what you're trying to say is, when you're pitching for money, you just say, hey, and I might ask you, especially in the first conversation, or we meet at a RIA, a good spot for private investors, private lenders go to RIA meetings to meet people just like you. So that's a good place to start out. And they might ask, well, what are your failures? How many deals have you done? Right, as a conversation gets deep, how many deals have you done? I've done 4. Okay, and how much money have you made on average in each deal? 4,000, because I lost money on this one deal, and I can promise you that's not going to happen again. Right, and here's what happened with the deal, just like whatever you say. So it's just about being authentic, and maybe you didn't lose any money on 4 deals. Maybe you made some money, but could you have made more money? See, that's another thing too. Sometimes I think we gloss over. There are a lot of deals where I made money, but I certainly could have made more money, right? So I mean, that's technically a failure too, right? Instead of making 40 on the deal, I made 28 or whatever. So why did I fail with getting another 12,000? So that's what I look at a lot of times, is like, okay, this deal should have been better. Why wasn't it better? Still made me money, still fine. Like, your favorite terms, like pigs get fed, hogs get slaughtered, right? And all that stuff too. But there's a lot of, in real estate, there's a lot of, and failure is a harsh term for some of it. I think it's maybe not failures. It's maybe just, you can't, you don't know what you don't know about how to maximize your deal until you go through deals, right? And so there's a lot of that. And so what you want to try to do is to talk to the private money person that you're trying to get money from, about how you're going to maximize their money. That's what they want to hear. How safe is it? What's my return? How are you going to maximize that? And theoretically, how's it going to be secured? So I just want to touch on one thing, is like, you need to know your numbers. You need to know your numbers. If you don't know your numbers on a deal, then don't bother talking to anybody about it, right? You have to know
Okay.
your numbers, and you have to be able to sketch it out, like on the back of a napkin if need be, like when you're sitting there smoking a cigar or whatever, drinking a bourbon, whatever it is, you need to be, or tequila in your case, I guess, you need to be ready to go with all that too. So you don't have to have everything memorized. You don't have to have a PowerPoint, but you need to know your numbers and you need to know the deal. Because if I'm going to give you money and you don't know your numbers, we will not have another conversation. There will not be conversation two.
Yeah.
So you have to be able to have a reasonable discussion about, here's the deal, here are the numbers surrounding it, and then and then just go from there.
Yeah. Yeah. I agree. I mean, it's ultimately going to come down to the numbers. Um, getting to that part of the conversation is a little more difficult than, because you're not even getting to that conversation if you're not authentic. And by the way, authenticity is, I think it's overused. That term is overused quite a bit, because you really can't get into being authentic unless you are sitting in your own integrity first.
Ugh.
It is very hard to be an authentic person if you don't have your own set of bounds and boundaries in your integrity. And so I guess if, I'm going to get, this is getting foo-foo. I realize that. But if you know, if you have you know, we all have internal dialogue. If you go into a conversation and you get outside of your integrity, your authenticity is not going to come through to that individual. So I'm only saying this because it is much easier to talk to someone when you have your own set of rules as it relates to integrity. It becomes very simple. You come off as authentic, and you are. It's not a lie. You're not spewing some garbage that you think they just want to hear. That's what I'm trying to say. So getting to the point where you're actually talking about numbers, you're talking about the deal. This is where I struggled, and this is what I figured out. I can talk about the numbers all day long. Like I've never actually lost money on a deal. I've always said that, but obviously early on my numbers were skewed, but I got really good at getting the numbers right. But that's the easy part, figuring that out. It's actually learning how to talk to people in a way that where they understand, you, where you're coming from. It's a personal relationship building thing. So, um, you know, first step, and I don't have any kind of like coaching on how to find your integrity. You already know what your integrity is. But as long as you're, like I said, as long as you're sitting in that, you will come off as authentic, and that conversation will go a whole lot easier. It's way easier to talk to someone when you feel good about where you're at, in the business and life and all that good stuff. It becomes way easier. So that's my thought on it anyway.
Yeah,
I'm,
100%. No, and we realize this might not be as fun and exciting as a topic as some of our other ones are. We dive into the step two and the creative. Well, I mean, this is creative financing too. You're getting the money so you can be creative, right? With it, and so it's it's one of those things that's not very sexy, but it's so necessary, right, to do it. And I just like to talk about, like, we're private money lenders, especially we like to do deal by deal. We like to do niche funding and all that stuff too. We do have a real estate fund we mentioned earlier too, that's hopefully launching here very soon from the end borrower perspective. But partners, shameless plug. We haven't done really any shameless plugs. I tossed up the barcodes, QR codes, sorry, a couple of times, but it's in there too. Partner with us. Like, we can walk you through doing all of this stuff. Like, our students have been pretty successful. I think one of our students has too many deals right now. so now we're talking about how do you scale all that too, and manage all that. Maybe that's one coming up too, is about how to manage the chaos, so to speak, in there too. But that's what that's what we're here for. That's why you go to people with experience that try to help you out. Like that's the whole purpose of Step 2 Empire and partnering with us to walk through that. And you're going to need some private money at some point if you want to be as successful. You could do one-off deals. That's not true. If you want to be able to scale and really get out of your W-2 job, depending on what you want to do, maybe you're rentals and burring, or you're fix and flipping, or combination, or whatever that looks like. Like, you're going to need private money, and you're going to need to be able to navigate that. And I am so dark right now in the thing. I cannot keep
fooling with that camera.
I keep moving it. You see how I got brighter, and now it gets darker, and then it gets brighter. I have windows behind me, and when the sun comes around, like it does at podcast time, and it comes through here, it really messes with the lighting. I mean, I can even have a flashlight in front of me and it still goes. See how that goes off there? And typically I'm a a little
You
hard on the eyes, and I don't know what it's like in all that too. So, but anyway, that was the point of the podcast today. Relax, be comfortable, have realistic conversations about what the deal is, how you're going to secure the money with the private lenders, and of course, going back to the beginning, what you always said, there's always hard money out there. If you just need something and it's a great deal, go in there. But you better know your numbers. Can't stress that enough. You better know your numbers, especially if you're using hard money. You better know your numbers.
Yep. Well said, man. I don't. I think I'm good.
Yep. Sounds good. Well, have a great weekend, everybody, and we'll be back. Hopefully, maybe not quite in the dark like this is. We'll be back next week.
All right. See you guys. Take care.